Mike Briggs is our cattle market analyst this week. U.S. farmers and ranchers produced 4% more beef in October compared to a year ago, and that was with one fewer day in the month than October 2015. Nebraska increased its output by 3% and accounted for a quarter of the country's total supply. November's cattle on feed report did show 5% fewer animals in the state's feedlots than in November 2015, and placements during October were 5% lower than the previous year. American beef and veal exports for October were up 17% from October 2015 and the best total since August 2014. We talked with Mike Wednesday morning and began by asking about recent market price movements.
Things have gotten considerably better. We went from 97 cents all the way back to about $1.15. So that's a tremendous rally in a short period of time. The interesting thing to me is we've really narrowed our spread with the packer. We were selling cattle under choice or under select, and we've actually got our back to where we're kind of in the middle between choice and select, where I think we should be most of the time. So it feels like you're getting a little bit more of a fair price for your cattle. Cattle are getting to where maybe they're not making any money, but at least you're breaking even or getting close to. Now, as we go forward here, I think you could actually see some profitability return to the cattle feeding industry. I don't know for how long, but for a short period of time, I think we could have some profitability return.
What led to the market rally there?
We were way undervalued, and we usually have a seasonal rally this time of year, and so we've gotten those two things. It was way undervalued, so you had a revaluation from that, and then because you usually have a good run in this time of the year.
What about the supply of cattle?
Supply of fat cattle is short, and that's the other thing that's helped us. You know, they talked all fall, oh, we're going to get short on cattle. We never did because people drug them along, but actually now we've got a little bit shorter on cattle. Now, the nice thing would be is if we could lower our weights, because our weights are adding to the total beef supply, and that's hurting us.
So tell me more about the weights of cattle both entering and exiting the feedlot.
Going out of the feedlot are still very high. They're not as high as last year. We're still a few pounds under last year, but unless, you know, this flip in the weather here may help that, because we were having such tremendous feeding weather and we're putting on a lot of extra pounds. Well, this little weather snap's going to curtail that. That'll take the top off of that deal. So hopefully we've seen our peak in our weights, and maybe they'll go down a little bit. Hopefully not from the disastrous type of weather we had last year, but hopefully they'll go down a little bit. Cattle coming into the feed yard aren't quite as small as they've been, because you've seen a lot of ranchers did not want to get rid of their cattle because the prices were so low and they were undervalued. So they've kept them, put a little weight on them. Now prices are back. You've seen excellent movement into the sale barns and a lot of movement into the feed yards, where last month you saw placements way under last year. I think this next month you're going to see placements over last year.
How full are feedlots right now?
There's still a lot of empty yards. We're pretty full. I know some yards that are full, and I hear quite a few yards are not. And there's a function of a lot of that. A lot of it's financial, a lot of it's lack of cattle coming to the market. I think there's going to be a tsunami of feeder cattle come to the market after the first of the year, and that's going to be really interesting to see how the market deals with that.
What are the roles right now for foreign and domestic demand?
Foreign and domestic demand. Domestic demand has actually been very good in holding up, even though the prices in the stores haven't come down like we'd like. Now, you have seen the retailer feature some things, and I think when they do that, they probably see some pretty impressive movement on it. So that's been good. The really good thing is you've seen foreign demand come up. We're way over last year in exports, and I think you're going to continue to see that, especially if the dollar would roll over.
How expensive are feed costs right now, and what's the impact to margins?
Corn is a lot cheaper than it's been in several years, and that's helping with margins, and I think corn will remain cheap. There's abundance of it around. Now, it is one of the cheaper feed grains in the world, so you should see good export movement, but we can't export it all. Now, ethanol producers have great margins, so they're going full crank. So you're seeing a lot of demand with the corn, but there's an awful lot out there, so I don't see corn going anywhere fast.
As you look back on 2016, Mike, what was the year like overall for the feeding industry?
Very tough. You saw a decrease, you saw an all-time record drop in cattle prices. They dropped 45% from their high. That's never happened before. You saw a lot of stress in the feeding industry, and you saw a lot of things that perplexed us, where we got so deeply undervalued on the cattle. how you saw all the volatility in the futures market, that's still an issue that needs to be addressed. There's entirely too much volatility in the futures market, and the change in valuation that does not have anything to do with fundamentals. And those two issues still need to be addressed. I think as we go forward, there's still a lot of protein in the market. I think there's going to be opportunities for margin in the future, but you're still going to have to be pretty prudent in how you do it, and you're going to have to protect them, because I believe that the volatility is going to come back next summer.